Hey guys, this one's going to be another quick member stream, right? So I've had a couple of questions, I guess predominantly back to, how do you enter and having live examples and all that kind of stuff. And there's, a massive, massive issue in terms of the, I guess, misunderstanding, right? Part of the problem with having an example, and it's not that it's not that it's not possible to have an example. It's not possible to have an example that's going to be the same every time, right? And this is ultimately the problem. You're not going to have, if it's this, then that, then use your 100% win rate in the strategy. What you have to look at is the character approaching the trade, right? It's not the character after the trade. It's using the statistics to your advantage in the long run, right? You're going to win a trade, you're going to lose a trade, you're going to win 2 or 3 trades, you're going to lose 4 or 5 trades. And this kind of sequence is going to go over and over and over again, right? The general idea is when you lose, you're losing 1%. When you're winning 5%, 10%, 15%. You're scaling into trades, right? Now, with that being said, what I want to do is, and again, right, this is not a criticism. This is just almost kind of banging your head against the wall for you to understand, this in terms of the notion, right? If I'm looking at these kinds of moves, all I'm looking at, right, and forget the time frame and the ranges and everything else, right? This is just the basic level, right? I'm just going to stay on one time frame even. What I'm actually seeing right now is as we power up and through, right? There's institutional involvement in that move clearly, right? Now, okay, there's something in there, but is this move as powerful as that one? Well, definitely not, right? This move right here, right? That's relatively powerful, but it's still not as powerful as that one, right? So this one for me is a very good indication of what I'm actually looking for. Now, if I was to say, where do I start from? Well, clearly I can see, higher highs, higher lows, right? And it's not until we actually break underneath this level that technically we change that momentum, right? We could argue that we changed it there very briefly, right? Now, obviously, that's a very small range, bigger picture. But obviously, at this point, we've kind of clearly changed it, right? So I'm not trying to predict where the market's going. I'm not trying to predict, what move I want next. What I'm saying is, what's the market telling me? What is the market giving me in terms of opportunities, right? So if I was to come back, right, let's just use, instead of using this because I know where the price is there, right, let's come back and we use a different type of example, right? We kind of come back into maybe the market shift on the way up, right? Now, this one here is a really ugly move and it kind of puts a lot of different things into question. If you get a move like this, stay out. If in doubt, stay out, right? If in doubt, zoom out. Now, obviously, at this particular point in time, what I'm seeing is the market was down, right? We had this, which is kind of potential clue, and then the market starts moving up, right? So, obviously, at this particular point, now we don't know that at that point in time, but what we do start to see is this market shift in terms of the dynamic, right? We had this, we had this, we had this crazy spike up, and at that point, the market fails to come lower. So what I'm doing is I'm following the logic and I'm saying to myself, okay, we're starting to make these higher highs. We're starting to get to a point where we've actually cleared this particular high, right? So at this stage, we know that we're in technically an uptrend. All I'm looking for in my mindset is up type moves, right? If I was obviously looking at this coming down, I'm ideally looking for down type moves, right? So let's just assume we're looking at the market from here, right? We know that we've just watched all of this play itself out. What are we looking for? We're looking for a pullback, right? Now, at this particular stage, this is where I can zoom in a little bit closer, look at the ranges, I can look at what's going on, what's actually happening, where, why, what, right? Now, as you can see, what we've done from this move down, we've come down, we've come up and we failed to make a high, we've made the first change of its character, we've come up again, right? Now, if I was watching the market at this particular point, I know that we've just had a nice rally. No, we're aiming for a pullback, right? So the first potential trade that I can go into is, let's just literally put a short on there. Let's put that in there, right? And we're just going to target, even a 2-to-1 type of move, right? Now, obviously, at this particular point, I can see in hindsight that this probably might not have even played itself could have walked away with a little bit if you wanted, right? This, a lot of people would have seen this over X number of days or hours and probably just said, okay, it's not for me, I'm out, right? Now that's one opportunity, right? And that's not, that's what you have to take. The problem with that particular move is you kind of counter trend, right? You know that you've got this move, you know that you're seeing a pullback. We don't know where that pullback's likely to end, right? So what we can then do is bring our ranges in, right? We know we got a range there and we know we got a range there. Right? Now at that particular point, what we've done and all we've done is we've had a move and we've had a pullback, right? So the better trade is not actually taking the pullback itself, and that's, nothing's stopping you from taking the pullback, right? That's not the point. This isn't the point of this video. The idea in terms of what I'm trying to show you here, right, is ultimately, look, you're in a position where we're not guessing which way the market's going. We're working with the market going in its direction, right? The reason that I could take a trade here, and that's without zooming in 1 minute time frame and so on, is I've literally taken the break, right? So entry 1, strategy 1, technique 1, live trade example 1. I would have taken that trade based on that break, nothing else. No other complicated strategy, scenario, ideas, techniques to that, right? It's literally that, right? If I was scaling into the trade, I'd be doing the same thing. I could say, okay, I got a trade. I could zoom into a smaller time frame, but in essence, as we break that low there, the structural low, I'm going to put my stop above the structural high, and I'm going to be targeting, even again, another 2-to-1 type of entry, right, or whatever it might be, right? Now, obviously, at that particular point, obviously, I'm going to be zooming in. This is just to show you the example in terms of a scaling, right? So it's not until we start then to see the shift, and this is where the working with the trade, working with the example comes into play, right? I know that we were in this massive uptrend, right? So the chances are we're going to carry on the uptrend because my bigger bias is up. Right? I know my biggest bias, and this will come into the second question, right? And the second question, a little bit different, and I'll explain that in a second. But ultimately, it's where my bias and my draw to liquidity levels are, right? So we know we've just seen a market shift from the downside to an upside, right? Because we saw this move. We know we've had a pullback and we see in a pullback. That pullback fails to take out the prior swing low. This is your first clue, right? Now, at this particular point, we have a move. We come back down. This makes a lower low, right? So at this point, this is the new starting point. We have a move. We come back down. We fail to take a new lower low. Right? So again, at this particular point, you've got another opportunity for a long entry should you want it. Right, and this is then just where you get into, seeing this, right? Now, obviously, you can do a couple of things. You can do this, and you probably would have been stopped out looking at the sweep. You could have done this, right? And obviously, the general idea with a move like this is you're targeting at least these kinds of highs, right? Again, we can zoom into a smaller time frame. We can check out bigger time frames and so on. But the general idea, right, is this is why there's nothing going to be exactly the same. It's never going to be the same type of move, the same type of entry, same type of stop every time. Right? Now, on a much larger time frame, and this is maybe a technique that you could take away from this, right? Or as was mentioned earlier, you could steal this technique if you wanted, right? The general idea, right, is when we look at this move, we got to identify what type of time frame this range is. So let's just assume this is my 15-minute, right? Now, on a 5-minute time frame, knowing that this is my 15-minute swing, all of this move is just an internal structural move, right? So what I've actually gone and done now is we've come up, we've made our first, run, right? And at this particular point, we are expecting a pullback, right? Because we've had, we've had our first move, we've had our first, starting to move up in the market, right? So there's nothing stopping me saying, well, I don't need to take this early entry, just like taking a Wyckoff spring, right? I could have other opportunities up here that I'm more excited to take, right? However, let's just assume that using the 3 time frame type strategy is my bias is to the upside. We've just seen a pullback facilitated, and we've literally just seen, right, a change in the character from this move, right? So first move, we wouldn't have been stopped out, obviously, if the stop losses were below. Again, this is personal to you. This is your risk tolerance, the time factor you're on, etc., etc., right? But what we now have is we have this as obviously our structural high. Right? What we then do is we come down, and in theory, we change the character back to the downside. Right? So let's just assume that we took this as a long, and we put our stop loss down there. One lost trade. That's part of the game, right? You know that's going to happen. Now, what we're going to do is look for exactly the same thing again. We get into a position. This now brings this new low, which is technically the sweep or the spring. Right? Then what we do is we rally up. Now, at this particular stage, right, this isn't exciting yet because we failed to take out this high. Right? So at this particular point, you've got an entry point here as option number 1. Right? That will give you a very similar position. We know that we want to be targeting, if we are holding these, we know we want to be targeting up at least this level, if not more. Right? We can put our stop losses now below these lows, another 5% entry. Right? So what you're looking for is that break. Now, let's just say that we break, right? You're going to have another opportunity again, because what's going to happen there is we break through that level, you technically sweep all these highs, and you come back in, right? The next entry that you have is exactly the same thing again. You're going to have where that high was, you've got an entry point there. My target is still to the upside, right? Same position in terms of the target. But now what I can do, I can reduce my stop loss to that prior swing low. There's 10%, 11% worth of trades just in there, right? Okay, we failed on this one because we tightened our stops too early. We failed on this one because we were counter the trend, right? That is part of the game. What you're trying to do is not win every trade. You're not looking for exactly the same entry or exactly the same stops, right? You're just looking for opportunities within the opportunities, right? And this is me staying on a 5-minute time frame, right? This is me saying, look at the level of opportunities. What do you think we get when we break above this level? Right? We didn't break here. We didn't break there. We broke there, right? We then facilitate the pullback. Right? Once we start seeing the shift of that pullback, there's your spring, right? It just went lower, which means we're in exactly the same position here, right? It's not until this particular point that we break through there. But when we break through there, right, this now confirms a new uptrend is underway. Right, now you can jump in there if you want, and you can have a very aggressive stop loss. You might have been stopped out again. But all you're doing is on a smaller time frame, we follow in the notion that we've gone and done this type of move internally. Right? Now, obviously, at this particular point, you see the market shift, the market structure changing. So we could argue, oh, we're going to go down. Right? Well, we know we got a much higher bias to the upside. Right? So the reality is, when we start breaking this level of character, there's nothing stopping us going again, right? And we look at this and we say, okay, let's put an entry in there. We know where our stop losses are. We can be very aggressive. We can be a little bit more conservative. But in theory, we're looking for just there, right? We could go obviously higher and just keep it running. The reality is, there's still a trade if you wanted in there, right? As obviously you start to play the sequence through, it's going to be the same thing over and over again. We then come up, right? What we do is we take that structural high, right? We expect a pullback. As we break that pullback, there's another opportunity because our longer term bias is up, right? And this was what will bring me now into the draw on liquidity, right? This particular one will give me the same kind of thing there. I've got an entry there. I have a stop loss down here. Right? And this particular one, I'm just going to target even if it's just a 2-to-1 again, right? There's opportunities in every single swing. There's opportunities in every single move, right? The idea is not to overcomplicate it, not to overthink it. It's just to zoom out and look at this and say to yourself, what are we doing? What's the market trying to tell me? The market is trying to tell me we were in a downtrend, we shifted to an uptrend. I'm looking for uptrend types of opportunities, right? I'm not looking to get really aggressive. I'm not looking to get really tight spreads and really tight stop losses. What I'm looking for is opportunities that this thing, until it moves or until it shifts, right? So bigger time frame, and this could be, I'm on a 5-minute, let's just assume this is the 1 hour type of move. Inside, I know I've got the 15-minute type of plays inside of this, right? We then come up. we then drop down, right? I'm not even being fancy with what I'm looking at here, right? All I'm doing is I'm following that trend, right? Now, all of a sudden, you think to yourself, okay, we're still in an uptrend. We've just made another uptrend move, right? We've just broken those uptrend highs, right? Now, if I was to look at this and I say to myself, there's my current swing range, there's my current swing range, what have we now done? Well, we've just shifted to the downside. So all of a sudden, I'm not looking for long opportunities, I'm looking for short opportunities, right? Now this brings me into the draw on liquidity, right? This is the next question. So this one's not going to be half as long as the last one. It's going to be a very quick explanation, right? If I was to look at what we've done, let's take these out of the way a minute, right? I'll put them all gone, get rid of them. I'm going to zoom out to my weekly time frame. Weekly time frame, I'm going to put my monthly and my weekly on, right? And all I'm going to do is I'm going to look at where we are, bigger picture, right? And there literally is the snapshot, right? And I know this is cheating because I've done this in advance. This is obviously something I've already marked up. But what I'm looking at is what was the driver that caused the break, right? And if you don't understand what the break is, the break obviously is this one here, right? At the moment, there's my swing high, there's my swing low, right? The driver is the unmitigated supply level that we dropped from. So if I had to guess right now, where is my draw on liquidity? Where is my bias? Well, my bias is up, but it's up on this time frame, right? Doesn't mean that my time frame bias is going to be on a 4 hour and a 1 hour and so on and so on. But to obtain the daily, the 4 hour, the 1 hour, the 15 minute, all I'm doing is replicating this technique on a small time frame, right? So if you imagine on a daily time frame, we understand that the monthly and the weekly is probably bias up, right? And probably bias up in the sense of chasing this level of supply that's unmitigated, right? To drive it down further, to retest it before we go higher, right? It's going to look for some kind of pullback. So with that being said, if I drop down to the smaller time frame, what I'm looking at on the smaller time frame is, well, again, what's happened, what's happening on a smaller time frame? Well, clearly we've had a rejection from this level. Right? So let's just go and put something on this level, right, in terms of where we are, and let's drag that across to the left. Let me just see if there's anything that's obvious, right, across that level there. Well, what have we got in there, right? That was another area. This is another, another order flow area, right? And the reason that this is an order flow area is that there are a few green candles prior to the break that broke the structure. Okay, now we got a structure break there, and technically this is the one that changed the market dynamic from an uptrend on the daily to a downtrend. Right? So of course this is a key level. Right, my bias is still to the upside, and what we're seeing right now is a reaction from this level. Right? So the question then is going to be not, hey, do we jump in long because now we've had a reaction? The question is going to be, right, my bias knows that this red box, and I've just been very vague with the red box, right? I haven't gone in and come to the specifics. So what I'm looking at is, okay, what's the other bit of information? We know we want to go up. For us to want to go up, what do we need to do? Well, we need to find liquidity potentially to the downside. So if I was to guess where that liquidity is to the downside, where's my last candle? Where's my last demand zone? Well, it's this one here. There's my last demand zone for a potential swing to the upside. Right? And again, I'm going to come into this and I can refine it, but it's roughly there. Right? So my current bias on this smaller time frame would suggest that for us to get up there, we kind of need a pullback, right? Even if it's only to here, right? Now, let's just assume that we pull back there. I don't care if this goes deeper, because at this particular point, I'm not in a downtrend on this time frame, right? I'm not in that move. This comes further. Where's the next level? Well, there's obviously liquidity there, right? And we've also got a bigger weekly controlling demand. We literally moved up from it. We've come back and retested it, but there's nothing stopping us saying we don't retest it again. We also have another one, right, which is sitting in here, right, which means we didn't retest that one either. That one's still live. So I now have a couple of areas that if we were to drop down, here's my bias. And all I'm doing is just repeating the process until I get to within the time frames that I'm looking for. It's pointless me using a monthly bias up and trying to trade a 1 minute time frame and saying, oh, well, it's not going up, it's falling down. Truth of the matter is, if you're looking for, monthly, weekly, daily, you want to be trading on probably the 4 hour, probably minimum 4 hour, right? If not, probably more likely the day, right? If you're looking at the daily 4 hour, come down to a 1 hour. Don't jump from a weekly time frame to a 5 minute chart and expect it to be, kind of in your favor. Right? The general idea of having multiple, like I did in yesterday's video, the general idea of having multiple ranges and multiple time frames was just to show you guys the fact that you can do this on any time frame, right? Me personally, what I'm doing is I'm looking at the weekly, I'm looking at the daily, and then ultimately I'm coming down to a 15-minute from the daily to say to myself, okay, if my bias is down, I'm looking for downtrend type moves. If my bias is up, I'm looking for uptrend type moves. What I then do is when I'm talking to Paul and we're having this kind of conversation one-to-one, then obviously I'm looking at these time frames and I'm thinking, okay, if I was to trade this on these smaller time frames, what's my secondary option? So what I'm then doing is I'm ignoring the weekly, right? I'm even ignoring the 4 hour a lot of the time, and I'm going from the 1 hour coming down to a 15-minute, which is my crossover time frame with the two time frame factors that I'm trading. So obviously, daily 4 hour, 15-minute, and then ultimately 4 hour, right, 15-minute, right, or even the 1 hour, 15-minute, doesn't matter. But at that particular point, I'm still only crossing the three time frames, right? From the 15-minute, I'm dropping all the way down to the one. So I'm either taking the entry on the one based on a 15-minute direction with that 1 hour or 4 hour overall bias, or I'm taking a 15-minute time frame entry based on the daily and the weekly type bias, right? So obviously at that particular point, whatever which way I'm looking at it, I'm still only ever using three, right? From what you're trying to do, if you are still thinking, a weekly is going to give you an edge because the weekly's up, but you're taking that on a 1 minute, this again is part of the problem in terms of where you're going to go wrong, right? You really need to look a little bit closer. You need to look at the range, you need to look at the size of the range, and then you need to account obviously all the other kind of parameters according to those types of strategies for your type of time frame, right? So grand scheme of things, kind of combining the two questions together is there's always an entry, there's always an opportunity, right? If I was looking at this right now, my bias on this will be literally, I can see an opportunity for, if we break underneath this level, then obviously there's going to be some kind of short. I could literally go here, right? And I'm looking for my target down here somewhere. Obviously, I'll be dropping down a time frame for that because that range is ridiculous and it's only a 1% or 1.25 R type setup, right? So part of the reason, again, if you put these types of things on your chart, you're going to quickly visualize how big of a trade. If that trade was, there's potential for it to come down here because we've got a weekly level down here and this really wasn't in play, then I'd be looking at that trade different saying, well, I don't really need to refine that. I could take that on a daily time frame. Truth of the matter is, probably come down to a 1 hour time frame and still take that and get a decent RR out of it, right? So look, that's part of the reason that this is very, very difficult in terms of trying to explain where an entry point is. The live examples, the real examples these are the real examples, right? Myself, Paul, we took a trade yesterday or the day before on literally the price touching the level, right? So, let's just assume this now on a daily time frame. Let's just assume that this is what we did, and we actually got stopped out of this in about 20 seconds, right? We took a trade that literally looked like this. When the price come back and pinged, right, we had a stop loss that was relatively aggressive on a 1 minute time frame, and all the price did was the price come back to our level. Let me put a pen on. The price come back to a level, and instead of waiting for any confirmation, well, I said to Paul, I said, look, I'm already up a couple of percent from a week. As far as I'm concerned, it's a punt. It's a 1% move. If I'm wrong, I'm wrong. If I'm right, it's a 10-15% gain. Ultimately, the price just kind of carried on through, right, and got stopped out. It's one of those things. It's a 1 minute time frame. It's you play the game. But ultimately, look, the general idea on this, if I was to take this on that one daily time frame, I'd be entering on the fact that we've touched my level. Right? We've had a rejection from the level. Don't need any more confirmation than that. I'm in this trade, right? At that particular point, I'm going to look at this and I'm going to assess as we start to kind of move on down. There's a 7% trade on the table. If we get a nice red candle into this box, chances are I'm going to move this to break even and walk away from the trade, let it play itself out. It hasn't cost me anything, right? So again, there's loads of strategies, loads of different ways and techniques and angles and so on. But truth of the matter is, from the direct messages that we've had, right, and both questions, is ultimately all you need to do is stop overthinking it, right? And that's probably part of the problem. Stop overthinking it. Really take that one step back to breathe, right? And then ultimately, when you get these opportunities, take the opportunities that are in the direction of the trend, but they need to be in the direction of the trend that you've then gone and analyzed, right? Not what I'm saying, not what Paul is saying, what you've read in the group or you've seen on another Discord server. You know, the reality is you need to do that for yourself, for you to understand what's going on, right? In terms of the character traits, the last thing I'm going to finish with in this video is, look, if the price is aggressive getting to your level, who's in control? That's the only question you need to ask yourself. If the price starts to deteriorate as it builds to a level, who's in control? Right? What's happening? And that's all it comes down to. Right? So at this particular point, think of it like that. Stop thinking too much in terms of the finite detail and just take this based on statistics. You're going to lose some, you're going to win a lot. And in the grand scheme of things, when you're losing small. When you're winning big. You will move forward. All right? Anyway, see you on the next stream. Thanks for watching, guys.